Amy, it has been a very, very calm on a relative basis market that keeps hitting record highs. What gives and can it continue?
Yeah, this is a question that we have all been pondering. Look, I've been calling this the paddling duck market because it does look calm, right? It looks calm on the surface, but there are violent rotations underneath. And we see that very much in option sentiment, Dom. We see that in the sucking out of exuberance from the call side. You're actually not seeing a lot of call demand in AI names anymore. And you are slowly starting to see the tick up of folks looking for protection. So I would say, it looks calm on the surface, but there actually is action underneath.
Maybe it's not out of the realm of reason, right, Amy? I mean, with volatility as low as it's been, the VIX kind of languishing around for the past several months here, buying downside protection seems to be a relatively cheap alternative to doing something else on the upside, right?
It absolutely is. Look, just on a completely factual basis, the cost of protection is at historic lows. The issue is, I've been saying that for a long time, and I am not the only one. And it's sort of a boy who cried wolf situation because we don't have any exogenous shocks. And what I think is happening is that may change. We've talked a lot about political volatility, we've talked a lot about geopolitical volatility. And I think as we see that, some of that exogenous shock could actually shake those costs of protection higher.
Okay, so with all of that in play, let's go through your word of the day and why it is.
So my word of the day is do nothing. And I have that in air quotes because it has felt like a do nothing market on the surface. But underneath, again, as I mentioned, I think there's a lot of action. And one strategy we like is I think folks really think at this point there is upside, but not that much upside compared to where we were at the start of the year. And so we like selling that upside, maybe 10 to 15% out of the money on call options to essentially fund downside. And what you're saying is, you're in some ways aggressively neutral on the market, but you believe there is more asymmetric risk to the downside than there is to the upside right now.
And before we let you go, Amy, we've talked so much about the AI trade and big technology right now. Are there certain key parts of the market that you see more action developing? Is it still in technology, or can we look elsewhere as well for more action?
Unfortunately, it really is mostly still technology. But what I'll tell you is you're starting to see different action from something like Apple than you are from something like NVIDIA. So you're seeing a lot of call exuberance being sucked out of something like NVIDIA, but it's still going in Apple. And this is one reason we have a paddling duck market, Dom, because one major weight is going one direction and the other is going the other direction. And you see that within the options. We just had OPEX, we just had a clearing event. And so I would expect to see investors start to post new positions from here.